Hello everyone. Today we are going to discuss about the Form 8814 Parent Selection to Report Child's Interest and Dividends. So you can see this is basically a single page form. It consists of two parts. Part 1 for child's interest and dividends to report on your return, and Part 2 tax on the first $2,200 of child's interest and dividends. You have to mention child's name, child SSN number as well. So let's start the discussion. You use this form if you elect to report your child's income on your return. If you do, your child will not have to file a return. You can make this election if your child meets all the following conditions. The child was under age 19 or under age 24 if a full-time student at the end of 2020. The child's gross income for 2020 was less than $11,000. The child's only income was from interest and dividend, including capital gain distribution and Alaska Permanent Fund dividends. The child is required to file a 2020 return. The child does not file a joint return for 2020. There was no estimated tax payment for the child for 2020, including any overpayment of tax from his or her 2019 return applied to 2020 estimated tax. There is no federal income tax withheld from the child's income. The next question comes, how do parents make this election? You qualify to make this election if you file Form 1040, 1040 SR or 1040 NR and any of the following apply. You are filing a joint return for 2020 with the child's other parent. You and the child's other parent were married to each other but filed separate returns for 2020 and you had the higher taxable income. Next point, you were unmarried, treated as unmarried for federal income tax purpose, or separated from the child's other parent by a divorce or separation maintenance decree. The child must have lived with you for the most of the year and you were the custodial parent. If you are the custodial parent and you remarried, you can make the election on a joint return with your new spouse. But if you and your new spouse do not file a joint return, you qualify to make the election only if you had higher taxable income than your new spouse. Please note that if you and your child other parents were not married but lived together during the year with the child, you qualify to make the election only if you are the parent with the higher taxable income. So guys, this is a little complicated form. Now coming to the next point, limitation on tax benefits. If you elect to report your child's income on your return, you cannot take certain deductions that your child could take on his or her own return, such as additional standard deduction of $1,650 if the child is blind, penalty on early withdrawal of child savings, itemized deductions such as the child's charitable contribution. Next point, if your child received qualified dividends or capital gain distribution, you may pay up to $110 more tax if you make this election instead of filing a separate tax return for the child. This is because the tax rate on the child's income between $1,100 and $2,200 is 10% if you make this election. However, if you file a separate return for the child, the tax rate may be as low as 0% because of the preferential tax rate for qualified dividends and capital gain distributions. Third point, if any of the above apply to your child, first figure the tax on your child's income as if he or she is filing a return. Next, figure the tax as if you are electing to report your child's income on your return. Then compare the method to determine which results in the lower tax. Next, is net investment income tax impacted? Guys, net investment income tax is a tax which is basically an additional tax for high income earners with passive income that exceeds certain threshold limits, exceed the exemption amount. When a parents include their child's income, it may impact their own NIIT or 8960. For the purpose of figuring any net investment income tax liability of the parents, on Form 8960, the following rules apply. All income reported on line 12 is included in the parent's modified adjusted gross income, and all net investment income included on line 12, except for Alaska Permanent Fund dividends, is included in the parent's net investment income. Investment interest expenses. Your child's income other than qualified dividends, Alaska Permanent Fund dividends, and capital gain distributions that are reported to report on your return is considered to be your investment income for the purpose of figuring your investment interest expenses deduction. If your child received qualified dividends, Alaska Permanent Fund dividends, or capital gain distribution, you have to see the publication 550 of IRS investment income and expenses to figure the amount you can treat as your investment income. Now coming to what about foreign accounts and trust. You must complete Schedule B, Form 1040 Part 3 and file it with your tax return if your child had a foreign financial account or number 2 received a distribution from or was the grantor or transferor to foreign trust. Enter Form 8814 on the dotted line next to the line 7A or line 8, whichever applies. Complete line 7B if applicable. Now coming to third point, please note that if you file Form 8814 with your income tax return to report your child's foreign financial account, you have an interest in the asset from that account and may be required to file on Form 8938, Statement of Specified Foreign Financial Assets. See the Form 8938 instructions for details. Now coming to beware of the Form 8814 pitfalls. In conclusion, while reporting the Form 8814 on your tax return to report child's interest may reduce the tax filing requirements for your children, it may specifically increase your reporting and tax requirements. If foreign account assets or trusts are involved, it can become infinitely more complicated. So guys, I have already told you that this is basically a complicated form, one of the complicated forms of 1040. So whatever I have discussed, I will show you in a software trick so that you have a better idea. Let's log into Drake first. This is Drake software and we are looking for 8814 form. Guys, you can see Form 8814 parent selection to report child's interest and dividend. First you have to mention the child SSN, their name, and I am selecting child's taxable interest as $2,000. Now Control V. You can see Form 8814 has been generated. Let's see. You can see enter your child's taxable interest on line A if the amount is different from the amount shown on the child's 1099 and 1099. Okay, see, you can see it is showing $2,000 on Form 8814. Also, please note the tax on first $2,200 of the child's interest and dividend. The tax on $2,000 comes to 90. Here is the calculation. You can see you have to multiply line 14 by 10%. This is line 14. You have to multiply by 10%. It comes to 90. I have already told you that 10% of the first 2,200 of the child's interest and dividend is the tax rate. So here it comes to $90. Now we are going to change this amount and let's see how much it comes. $6,000 I have reported, and you can see the base amount is 2200. You can see $110. In our previous example, the tax was $90. Now it comes to $110. So you can see the difference. Please go through each and every line so that you have a better idea about the form. I have reported child's taxable interest as $6,000, which is flowing on line number 1A. The base amount comes $2,200. You have to subtract line 5 from 4, which comes to $3,800 on line number 6. Now coming to in part 2, line number 13, amount not taxed, entered 1100. Subtract line number 13 from line 14. Line 4, sorry. Line 13 from line 4. Okay. $4,900. Is the amount on line 14 less than 1100? It is no, definitely a no. It is $4,900. No. Then enter $110 and see the note below. If you check the box on line C above, see the instruction, otherwise include the amount from line 15 in the tax you enter on form 1040. So guys, this is calculated on $1,100. The 10% of $1,100 come to 110 tax. So this is the tax amount. I am repeating that it is a bit complicated form, although I am just recapitulating what I have already discussed earlier. You can only use the form if you want to elect to report your child's income on your tax return. If you do, your child will not have to file a return. You can make the election if your child meets all the following conditions. The child was under 19 or under age 24 if a full-time student at the end of 2020. The child's only income was from interest and dividends, including capital gain distribution, Alaska Permanent Fund dividends. Next point, the child's gross income for 2020 was less than $11,000. The child is required to file a 2020 return. The child does not file a joint return for 2020. There were no estimated tax payment for the child for 2020. There was no federal income tax withheld from the child's income. Now, how do you make the parents an election? You can qualify to make the election if you file form 1040, 1040 NR or 1040 SR. Any of the following applies. You are filing joint return for 2020 with the child's other parent. Next point, you and the child's other parent were married to each other but filed separate returns for 2020 and you had the higher taxable income. Point number 3, you were unmarried, treated as unmarried for the federal income tax purpose and separated from child's other parent by a divorce or separate maintenance decree. The child must have lived with you for most of the year. But if you had your new spouse do not file a joint return, you qualify to make the election only if you have higher taxable income than your new spouse. Please note, you and the child's other parent were not married but lived together during the year with the child. You qualify to make the election only if you are the parent with the higher taxable income. Please guys remember this point. And the last point is limitation of tax benefits. If you elect to report the child's income on your return, you cannot take certain deductions. Those are additional standard deduction of $1,650 if the child is blind, penalty on early withdrawal of child savings, itemized deductions such as the child's charitable contribution. If your child qualified dividends on capital gain distribution, you may have to pay $110 for more tax